Hello once again, guys. Welcome back to Stock Radar. I hope you've had a great week so far. So in this video here, we're going to be talking about Walmart stock. That is the stock you guys voted on over in the private Facebook group. And in case you guys did not get the email I sent around or I posted about this in the Facebook group, I'm actually going to be discontinuing this membership at the end of September, meaning we have 2 more videos coming up. And so we'll basically do 1 more vote over in the Facebook group. And then I'm going to be wrapping up Stock Radar at that point. And the reason why is because I have kind of spread myself too thin between the different things I have going on. My YouTube channel, for one thing. I've recently purchased a very large Instagram account that I'm working on building out. I'm working a lot on the blog that came with that as well, the Investing Simple blog. I'm hosting my first live event coming up in October. So if you guys are interested, that's also an option if you guys are looking to, learn more from me and learn more about passive income. And so basically there's a lot of stuff that I have going on, and what you'll find is when you have too many projects, you're not really devoting yourself fully to each thing, and you're just kind of dabbling with each of these. And so I really had to kind of sit down, take a look at my business and figure out what things I really enjoyed doing the most, what was getting me the best ROI. And this really just came down to, the number of people I'm able to help. I'm able to help a lot more people with my YouTube channel and with a blog than I am with a membership group. And while I have enjoyed this, I just would rather have a larger impact and be able to help more people. And it just came down to the fact that I just had too much on my plate, and I had to figure out what I was going to cut out in order to free up more of my time. And so unfortunately, it was this membership site. But just to answer a couple of questions I've been getting commonly from you guys. First of all of the existing content is going to be accessible probably forever. I don't see any reason why I would take this down. So if you are a member now, you're always going to be a member, and nobody is going to be billed from this point forward. I've canceled all of the payments. If you are for some reason billed, shoot me an email. I'll take care of that immediately. But I've refunded all the September payments and canceled everyone's payments going forward, but you will still have access to all the pre-existing material. And I'll also leave the Facebook group open for you guys to have that communication forum between each other and be able to talk with people that you've met through that group. So the group's going to remain. The membership site's still going to be there, but there's going to be no new content being added to that. So that is the update there for you guys. But anyways, let's get into this analysis here. The symbol is WMT on the New York Stock Exchange. They have a relatively high price to earnings ratio of 57.7 and a dividend yield of 2.16%. And this is a very large company with a market cap of just under 285 billion. And we're going to classify this as an income and a growth stock. It's definitely more conservative than aggressive when it comes to that growth, but there is some growth being seen with the stock here. But again, it's not a growth beast by any means, and this is a 73-year-old company. So let's go ahead and cover a background on this company. I'm sure we're all familiar with Walmart, but Walmart engages in retail and wholesale operations worldwide, and they operate through 3 different segments. Number 1 is Walmart US, number 2, Walmart International, and number 3 is Sam's Club. That's their membership warehouse that they have. They operate stores, warehouse clubs, and a number of e-commerce sites, and they operate 11,500 stores in over 28 different countries. So let's start off by talking about the valuation of Walmart stock. And on the left there we have the recommendations from analysts. And as you can see, a lot of people are saying this is a hold. You see some people saying it's a strong buy, some saying it's a buy. Most are saying it's a hold. And the small majority is saying it's going to underperform or that you should sell this stock. And when we look at the analyst price target here, on average, they're saying the stock should be valued at around $104 per share. And right now we're at about 96, somewhere around 96.50. So we're actually pretty close there, meaning that in my opinion, at best case scenario here, Walmart stock is fairly valued, if not maybe even leaning towards overvalued. So I like to be seeing stocks where the analyst price target is 10, 15, 20% higher than the current share price. When it's about in line, that's not really a good sign. You typically want to see, possible upward movement with that share price based on analyst expectations. But anyways, let's go ahead and look at Walmart compared to some of the competitors here. The biggest competitor is obviously Amazon, and then we have Costco as far as competing with Sam's Club. Target and also BJ's. That's a stock that recently went public, and they've actually been doing really good since their IPO, which was in June, I believe. But anyways, Amazon stock has a PE of 178, the highest price to earnings ratio. They have a forward PE of 77.6, having the highest forward PE, and a PEG of 2.5. Walmart comes in at a 57.6 PE, 19.8 forward, and a 3.6 PEG. So Walmart actually has the highest price to earnings to growth ratio. And their PE and FPE are up there as well. Costco comes in at a 37.2 PE, 31.3 forward PE, and a 2.8 PEG. It's a stock we've already analyzed in this group. You guys can check out that video if you want more information. Target comes in at the lowest price to earnings ratio of 17.8, lowest forward PE of 15.8, and a PEG of 2.2. And then BJ's has a PE of 40.7, a forward PE of 21.8, and the lowest PEG of 0.6. So looking at these stocks here, Walmart is not one that jumps to my attention immediately. If I was looking at these stocks, I would be keeping an eye on Costco. I would do my research on BJ's, and of these stocks here, Target appears to be at the most reasonable valuation, and then based on that PEG, BJ's would be at the most reasonable valuation here, but I would not be saying that Walmart is undervalued. I would say right now they're probably being fairly valued by the market. Moving on now, let's go ahead and take a look at that dividend here. And this is actually a very valuable lesson for you guys. Make sure you're checking your sources when you're looking at different data here, because I pulled this data from NASDAQ. And as you can see, it's only showing dividends here from Walmart for the month of October. And when I saw this, I was like, I did not think that Walmart was an annual dividend stock, and they're not. This was just simply wrong information. And so always make sure you guys are checking your sources here, because this is saying Walmart pays 50 cents in dividends per year. They do not. So always double check when something like this jumps up at you, because this was definitely incorrect. But let's take a look at the coverage ratio here. In 2017, they had earnings of $4.38 per share, and they paid out $2.04 in dividends, giving them a coverage ratio of 2.1, which is phenomenal. And then in 2018, they had $3.28 of earnings, $2.08 of dividends per share, giving them a coverage ratio of 1.6. As long as that's a 1.5 or above, 1.5 to 2 is a perfect range to be in. It means they're being generous with the dividends, and they're leaving enough money for them to, run the business. They're not overextending themselves with that dividend. And in my opinion, that is really one of the only attractive points about this investment is the dividend. And later on, maybe even on the next slide here, it does mention they have a 45-year dividend growth streak. So Walmart is a really good stock for dividend investors. It's a very consistent business. But beyond that, I'm not really seeing much as to why I would personally be investing in this stock. So let's go ahead and talk about the pros. First of all, the main one here is that this is a great value option, making this a recession-proof investment. So if we do see a retraction with the economy, people aren't going to be spending money at Whole Foods or Trader Joe's. They're going to go back to Walmart because that's where they can get the best value. And so this makes Walmart a recession-proof investment. And for people who are looking to maybe diversify and get rid of some of that risk in their portfolio, Walmart might be a good option if you're looking to have a recession-proof investment. Now, Walmart has been acquiring a number of e-commerce sites, one example being Jet.com, and Walmart is the world's largest retailer, so they do have a very large amount of market share in the retail space. That 45-year dividend growth streak is impressive, and they are rapidly expanding the grocery pickup. Personally, I've used the service myself. It's actually pretty convenient. You order your groceries online ahead of time. You pull up to a designated section of the Walmart parking lot, and they come right out to your car and load the groceries in your car free of charge. And this is really what they're having to do to compete with, Amazon and other grocery stores out there, because they need to make sure that, if somebody else is doing this, they're going to have to do it as well. But they are rapidly expanding grocery pickup, and I will say it is a very convenient service. Now, one of the most exciting pieces of news for Walmart, in my opinion, because I am a JD shareholder, is that they are partnering with JD.com to expand operations in China. So that is a good, very good sign there, mostly for JD.com to have such a reputable retailer investing in that company. And then the other main pro here is that Walmart.com, in order to compete with Amazon Prime, offers free 2-day shipping on select items with no membership needed. So whereas with Amazon, you have to pay for Amazon Prime to get 2-day shipping, Walmart gives you that 2-day shipping free without having to pay for any kind of membership. And that is their way to be trying to compete with Amazon and Amazon Prime. So moving on, let's go ahead and talk about the cons of investing in Walmart. And of all the companies out there that Amazon could hurt, Walmart is, in my opinion, at the top of the list. Amazon is a massive threat to Walmart, and Amazon offers services above and beyond what Walmart does. So maybe yes, Walmart's able to compete on prices, and they are able to offer, that 2-day shipping without having to pay for your Prime membership. But there are so many other good benefits to having the Amazon Prime membership. I just watched the Jack Ryan series on Amazon Prime. It was awesome, and it's cool that that is something you can only get by being an Amazon Prime member. There are just so many benefits to having Amazon Prime, and for most people, it's going to go above and beyond that 2-day shipping. So unless Walmart were to diversify into media and maybe have their own Walmart streaming service, I have no idea if that would work for them, but that is the kind of things they would have to be doing in order to compete with Amazon. I don't think the 2-day shipping is going to cut it. It is convenient and it is good that they're offering that, but I don't think that's going to be enough to ward off Amazon and Amazon Prime. The other thing is that right now Walmart is a company that is in flux. Their old business model isn't going to work in 5 years or 10 years. Their old business model of land grab strategy, grab as much land as you can, build as many stores as you can, is not going to work anymore. And it's interesting because Walmart used to be the dominant retailer out there, and I remember seeing signs in my area, Sprawl Mart, Walmart with the X through it because it was killing brick and mortar stores because they couldn't compete on price. Well, now Amazon is going to be doing the same thing to also brick and mortar retailers, but now to Walmart as well. And so this is a company totally in flux. Their old business model's not working. They need to pivot and go all in with e-commerce and figure out how to compete with Amazon. And that's just not a battle that I would want to be involved with. And like I said, looking at that valuation, I would say at best the shares are fairly valued right now, if not leaning towards overvalued. And my opinion is that Walmart represents old retail while Amazon is new retail. If I had to bet on these two companies, my bet is going to be on Amazon any day of the week. So moving on here, let's go ahead and take a look at the balance sheet here. And as you can see, it's just pretty consistent. We're not seeing much of anything happening here. Total assets have been flat over the last 4 years, $203.5 billion in 2015, $199.5 billion in 2016, a little bit lower in 2017, and then back to about $204.5 billion. So over the last 4 years, assets have increased by $1 billion, but that is a very, very small amount, somewhere around 0.5% gain in total assets over 4 years. Really no gain at all there. Total assets have been flat. There has been no growth there. And then cash and cash equivalents over the last 4 years have been in decline from $9.1 billion in 2015 to $6.7 billion in 2018. However, if we take a look at the quarterly data, we'll see that cash and cash equivalents have been on the rise and they have increased 21.9% over the last 4 quarters. Moving on, let's go ahead and take a look at the liabilities. So total liabilities have increased slightly from 2015 to 2018, growing 3.7%. And we said total assets grew maybe 0.5%. So we are seeing that the growth of debt or total liabilities is outpacing the growth of assets. That's not something I like to see on a balance sheet. But we are seeing that long-term debt is declining, and most of the debt that Walmart has is short-term liability, short-term debt. They don't really have, they do have a sizable amount of long-term debt, but typically I like to see companies that have more short-term debt, current liabilities, than long-term debt. And then looking at the last 4 quarters, total liabilities have been on the rise as well. So what we're seeing is no growth of the assets and liabilities are growing slightly. And then when we take a look at the coverage here of the debt, total assets have some coverage of total liabilities at a ratio of 1.58 to 1 in the most recent quarter. So they do seem to have, control of their debt. It's not growing at a crazy fast rate, but we are seeing the debt growing at a faster rate than assets because we're seeing virtually no growth here in total assets. Moving on now, let's go ahead and talk about the total revenue, cost of revenue, and then net income and cash flow from operations. So total revenue has been relatively consistent as well over the last 4 years. That's pretty much all we're seeing from Walmart here is consistency. Total revenue was at $485 billion in 2015, and now it's at $500 billion. So yeah, it has increased slightly, but we're not seeing any kind of crazy growth here in total revenue. Gross profit has increased every year since 2015 at an average rate of 1.8% per year, so very slow growth there of gross profit. Again, this is not a growth beast, it's a very conservative growth stock, and it's also a business with very slim margins. They're not going to have crazy margins here with the business they're operating in. And one of the most important things that we notice here is that net income has declined every year since 2015. In 2015, net income was, $16.3 billion. 2016, we're looking at $14.7 billion. 2017, 13.6 billion. 2018 was 9.8 billion. So we're seeing a sharp decline taking place with net income, not something I like to see at all on the balance sheet. And then looking at cash flow from operations, again, very consistent. Not much growth here, not really any growth being seen. They're just a consistent company that has had consistent operating history over the last 4 years, with a slight increase in debt and a decline in net income. And then if we take a look here at these financial ratios, you'll see the current ratio has declined as they have lowered, their cash surplus, as well as the quick ratio and the cash ratio. Gross margin has been relatively consistent at 25%. Operating margin has declined from 6 to 4% over the last 4 years. Pre-tax and profit margin have declined as well by 1 to 2%. Pre-tax ROE is down, and after-tax return on equity is down as well. So these are not numbers I like to be seeing here as something I would potentially invest my money in. So overall, my opinion of Walmart is this is a stock that I'm personally not invested in. I wouldn't be interested in buying this stock. As a dividend investor, I could understand why you would want to have Walmart. And if you are somebody who's looking to buy a stock that's going to be more durable in a poor or bad economy, then yes, Walmart does make sense. But as far as the growth potential, I see no growth potential for this company. And I don't really have confidence in Amazon I don't really have confidence in Walmart as far as fighting this battle here with Amazon. But looking at the stock here over the last year, Walmart stock is up 19.7% compared to a 16.5% return from the S&P 500. So over the last year, they have outpaced the S&P 500. And then over the last 5 years, Walmart stock is up 28.9% compared to a 70% return from the S&P 500. So over the last 5 years, the market has totally outpaced Walmart stock. And then just to summarize my points again here, Walmart has little to no growth potential, and the name of the game for them right now is to retain market share. There's really no growth potential for this company. And Walmart has little to offer growth investors. There's really no growth here being seen. There's no real growth potential, but it is a great dividend pick if you are an income investor. But personally, in terms of retail and e-commerce, my bet is on Amazon. I just don't have the confidence in Walmart. But anyways, guys, that's going to wrap up this video. I hope you enjoyed it. Let me know what you guys think over in the private Facebook group, and I will see you in the next video.